since Trump's come into power, we looked at impressions and inquiries onto our website from the US and Canada. And there's been over a 250% increase from the US and Canada. So we feel that those tailwinds only will start coming through the next booking cycle. I think there's a structural tailwind coming for the UK from purpose-built student accommodation especially. We've got 7,000 students that have just moved in 2 weeks ago. And through Verbaflow, we set up outbound campaigns where we call all the students and say, how was your move-in process? Was everything okay? We then say, are you staying in the city next year? And if they say yes, the workflow is set up to then say, okay, are you interested in rebooking your room next year? And if they say yes, then it allows us to really start driving that predictive analytics for the first time.
Bay, welcome to the People Property Place podcast.
Thank you, Matt. It's great to be on here.
Not at all. Well, look, I'm really excited to learn a little bit about your background, understand the Downing story, and also Aboria as well. But before we get on to some of that stuff, the question that I ask everyone first up on the podcast is, did you choose real estate or did real estate choose you?
I think I definitely chose real estate in the sense that naturally we've come from a family business that has specialised in developing purpose-built student accommodation and operating purpose-built student accommodation. But I definitely had a choice to go into real estate, and I took on that choice head first and really have decided to take on the opportunity of leading Downing into its next phase of growth, which I'm really excited to do. So I'd definitely say I chose it indirectly.
You kind of didn't really have a choice, but then you kind of lent into it and chose it as well. For the listeners listening to this who haven't maybe come across Downing before, can you tell me a little bit about the business and maybe the origin story as well?
Yeah, so I think I've got to talk about the evolution of Downing before I come on to myself, given that my name's on the front door of the business. But if I start with Downing, so Downing have specialised in developing and operating student accommodation for the last 37 years. The company was founded by my dad, George Downing, together with his two sisters, Sally and Anne. And the strategy at the start of our company evolution was to acquire housing stock in the northwest of England. Over time, that housing stock became occupied by a large number of students. I guess to demonstrate some of our heritage in the space, one of the first portfolio sales that we did was actually to Nick Porter, who then went on to create Unite, which is the largest listed PBSA company in the UK. We then evolved in the early 2000s into developing purpose-built student accommodation, doing joint ventures and selling high-quality stabilised assets to the likes of Blackstone, Greystar, Unite, Tristan Capital Partners. And we've really grown organically on our own balance sheet to where we are today, where we've got over 7,000 beds under management and 200 people that sit within the vertical integration of the Downing Group. To date, we've developed over 15,000 beds and over £4 billion of gross development value. The last piece of the puzzle for us was investment management and really expanding the services that we already provide and sharing those returns with new incoming investors. And it was I thought it was a great time to lead us into the next phase of our growth and provide a truly vertically integrated investment structure where we have the investment, development and operations all in-house, really driving that value and alignment across the whole value chain. And as for myself, I act as the joint CEO of Downing, really privileged to be able to lead us into our next phase of growth. I feel like I've lived and breathed Downing for what feels like my whole life, but I've really been actively involved in the business for the last 7 to 8 years. And I think that gives you. We'll get into all the good stuff, how that's come about.
So, how did your dad set the business up? Talk to me about the origin of Downing, and I'd just be really intrigued just to understand why he kind of landed on student accommodation and how he's been able to build it into such a successful business.
Yeah, I think for those who know my dad, I think my dad's built a reputation for being a great businessman, a great dealing person, and he's been being able to really use his instincts to really build what we have today in Downing. And I think that to in the context of this story, my dad really became the man of his house when he was 21, because his dad passed away when he was relatively young, roughly around the age of 21. And he, at that age, he took over a snooker club, and then through selling the snooker club, he went on to acquire houses in Liverpool, and through that really started to amass a portfolio of students that were living in those houses. And when he did that first sale, he always tells a great story of when he wanted to then develop a student block in Liverpool, which was actually a hospital, which my eldest brother Lewis was actually born in.
Okay.
And it was a great story. But he always tells us he tells a story of when he went to the local bank for finance, and he told the bank he was going to develop a block of student flats and with just students in, and they couldn't wrap their heads around the fact that he was going to develop purpose-built student accommodation with just student flats at the time. You've got to remember that it wasn't an asset class at this point in time, so we had no comparables to compare against, and really pioneered the sector as we see it today.
So in terms of kind of actually starting the business, there's a snooker hall business that I guess kind of tragically he inherited because his father passed away. He sold that, and then was it kind of HMO type stock or kind of small flats that, you know, doer-uppers that he would kind of buy, you know, and then kind of rent out specifically to students? And, you know, he got one, and then he got two, and then he grew to three. And is that kind of the evolution of how the business started?
Yeah, exactly. It was HMO type stock initially, which he was doing up, buying, and really thought he could do a better job of what was available to the students at the time. I think it was circa around like £30 to £40 a week at that point in time. And really looking at HMOs where you could house 4 to 5 students in those houses, and over an 8 to 10 year period really amassed a portfolio of houses that he had students in.
That's what an incredible story. And he just kind of just slowly grew it in terms of portfolio size, reinvested the money, took on bank finance, and kind of hired and built his team, you know, slowly.
Yeah, I mean, I think testament to really my dad and his two sisters is that we've really grown organically on our own balance sheet since inception, and really developed out stock, stabilized it, sold that stock to investors, and regurgitated that equity to build out the next phase of our pipeline. And that's really what we've followed the same model for the last 37 years, and through that success, we've been able to now build out what I classify as like best-in-class developments where communities are thriving. And I think if you look at our latest development that we've just completed in Square Gardens in Manchester, it's by far the best development that we've completed in the last 37 years. 1,800 beds across three blocks, and it really sets the benchmark for new urban city centre living.
We'll probably come on to kind of that a little bit later in terms of our conversation. But in terms of you, did you grow up in Liverpool? You know, what was kind of your journey in story?
I spent the first 12, 13 years of my life growing up in Spain, in Marbella. I had a great childhood where I really got the benefit of really learning to speak Spanish early on through playing football for Spanish football teams. I then moved to the UK when I was 12 to go to boarding school in England, to Millfield, where I still continued the football, but really it gave me an opportunity to have friends from all different walks of life, which was a great experience and a great time there. And then following on from Millfield, I went to university in Florida, to the University of Tampa, where I studied business entrepreneurship and business management, and had the opportunity to play football. You know, I'll probably get told off for saying soccer, but playing football out there on a football scholarship.
So was part of the plan to kind of go down the professional soccer football route and see if you could make it doing that?
Yeah, I mean, I think it's every young lad's dream to do that, and it definitely was mine. And I wanted to give it a good shot of doing that. I think the benefit that I got while I was at university was that my degree was based on starting businesses, and I was also playing football 6 times a week, and you're almost treated as a professional athlete when you're there. And through that, I learned a lot of time management skills, really dedicating time to what's important, what's not important. And I've taken a lot of what I've learned through that into what I do today. And I think I was lucky enough that I was at university encompassed in a ecosystem of starting businesses, and really I learned so much while I was there, and it gave me sort of the burning desire to really take what I've learned into my business life post football.
Did you start businesses out there as well as kind of study it?
Yeah, well, I had two of my best mates while I was out at university. We all lived together, and I mean we tried numerous different businesses while we were out there, and had success at some, and we weren't successful in others. But I think what we learned was to really make mistakes as fast as possible and learn from them mistakes. And so we had a few successful ventures while we were out there, and it was just a great experience for me.
At what stage was kind of the writing on the wall in terms of that maybe a professional football kind of career was maybe not out of reach, but it maybe wasn't going to happen? And where did kind of real estate kind of come back into the frame in terms of your thought process?
Well, it was funny enough. It was lockdown was the first time in my life where football actually stopped. So I was playing semi-professional football before lockdown, and when football stopped, and it was a time for me to reassess. Okay, am I missing playing football? And I was still continuing to do a bit of work at that point in time, and as I reflected, I just didn't miss it at all, and it gave me the opportunity to really think, okay, what's the opportunity cost of me not being involved in the family business, with my dad still being around and learning from all the success that's learning from all the items that's made us successful. And I really decided at that point in time to really, okay, I'm going to park the football aside and going to into the real estate sector. So I did that initially by, you've got to imagine, Downing's a well-oiled machine. We've been operating for 37 years, and coming in as a family member into a family business that is already set up, you have to be really proactive and be curious to make improvements into the business. But for me, in my first instance, when I joined the business, it was just a lot of appraisals, Excel sheets, and big numbers that was really hard for me to digest. So I just took it upon me to look at a redevelopment in Liverpool city centre of a shell unit, which I converted into 6 apartments and 3 retail units on the ground floor. And that wasn't involving any of the Downing team members. That was really just for me to learn the fundamentals of real estate, if you like, by doing.
So kind of doing your own deal,
exactly,
working everything, successes, failures, ups, downs.
Yeah, and that was all with the own capital that I had available to me to learn all those fundamentals myself. And that really taught me the fundamentals of real estate and what I needed to then really, okay, this is something that I really want to get into and I enjoy doing, especially from the building a team, learning how to market those assets and sell them at the best prices, the different jurisdictions and different opinions from real estate agents that you can get. And yeah, it was a great entry into the sort of real estate market, albeit I feel like I've lived and breathed it my whole life, and being around family dinner tables, and it's all we really speak about, either sports or business. So yeah,
I guess before you properly committed, it was a case of, right, let me see if I can get my head around it, but also enjoy it, and curious to kind of learn a little bit more. And once I've done that, can I turn a profit and exactly. Then maybe really understand what I'm getting myself into. Your one of three brothers. Are you the youngest?
I'm the youngest, yeah.
You're the youngest.
So I'm born in May, and my oldest brother Max and Lou are born in March and April. So we're all almost 1 year apart and really close, yeah.
So 1 year apart, you're already close, and the youngest son is now the co-chief exec of the family business. They didn't want to go into the business, or
Well, my older brother Lewis, he went into he's a sports agent, and he really excels at that, and he's doing a great job of building out his own company, really working with professional athletes. And Max also works in the company. He works in the development team, and he's our director of acquisitions. And I think Max has been involved in all the different areas of the business, but really starting to excel in that area now as well.
and so did you always want the kind of the chief exec kind of role, or did you always kind of want to go down that route from kind of a management and leadership and I guess a succession planning piece, taking over from your dad?
You know, I didn't really think about it. I didn't think I want to be the chief exec of Downing growing up. It wasn't really at the back of my mind. I think I was more focused on trying to be a professional football player. And then as I've started working in the business over the last 7 to 8 years, and really driving a lot of the change that I've wanted in the business in terms of as I said, I think I've been really curious as to why we do certain things, and really asking, okay, why do we currently have that process, and how could we improve it? And I think I've took a lot of what I've learned from my degree in America and the lessons that I've learned there to implement those practices into Downing. And through doing that, it was just a natural succession plan for me to take on the next phase of our growth, especially with me co-founding Aboria as well.
So you did your own kind of development investment in Liverpool with the 6 flats and the kind of 3 ground floor retail units. Did you kind of, in terms of when you formally joined Downing, did you kind of work through different departments, or kind of how did your kind of early kind of career with Downing look like in terms of learning the ropes and understanding kind of the nuance and the inside structure of the machine?
Yeah, so that is something that so over the last 7 years, I've really been a sponge to learn all the different departments that we have within the company. And that's initially working within property management and learning all the sort of fundamentals of property management, also working on site operationally and understanding how we give our customers the best customer experience. And then really being in the head office, really working across multiple departments within finance, the development area, where we've built a reputation for having assets within the Downing student brand in quality locations adjacent to local universities, especially regionally, and then more prominently over the last 10 years in London as well. And through having the multifaceted departments that we have in Downing, I've been able to take that knowledge and really use what I've learned by now. What I'm developing is really using the data that we extract from all of those different departments to lead business decision making going forward. I think we're in a really unique position as a vertically integrated business to leverage that data across all those different departments, and really what the fundamentals that we want to achieve out of those different departments, really from a property management and operational point of view, looking at our OPEX per bed and how we can become more efficient, and through investment, really looking at, and sales and marketing, looking at lead generation and cost of acquisition, and really the sort of the engine behind the real estate.
To kind of take the platform, take the playbook, and kind of look at it quite objectively in terms of what's worked, but then also with a kind of a fresh perspective, and go, right, based on kind of the studies and wider curiosity and technological advancements, think about how can we implement some of that technology to be more efficient and data orientated, and remove some of the manual task, and just drive greater efficiency and scale.
I mean, I am tasking all our departments at the moment to really allow us, really asking the question, if you have a manual process in the business, I want you to come back to me on how we can solve that manual process and automate it. And over the last year, we've been able to have, we've had some great use cases where we've been able to do that. And really that is fundamentally to not drive people out of the business. That's the far from it. It's just to make us more efficient in the business so we're ready to scale. And that really has been a piece of work that we've been driving over the last 2 to 3 years, especially as technology is improving significantly. There's some real big upside that we're able to benefit from that.
Can you give me, some examples of some of those kind of efficiencies that you've driven and what that kind of looks like, from a kind of a use case perspective?
Yeah. So if I take one of the first ones, where lead generation and inquiries. So typically when a potential student or parent is coming on to Downing students and booking with Downing students, they will typically, from inquiry to booking, that average time last year was around 14 days. And that's really everyday FAQs that get asked: how far is the university? What's this policy? It's a load of different questions that come in. And as I was really analysing that, and I thought, how could we really increase our conversion rates and increase our lead generation, and not have the responsibility of the whole sales admin team to really drive those leads and go through that process. And through that, we made a strategic investment as a family office into a company called Verbaflow, where we've been able to automate a lot of our lead generation across the business. So that's across WhatsApp, email, call, and text. And what that now does is that any customer that's coming onto Downing students now can ask any question they want at any time of the day, and it gets responded to immediately, and it's factually correct. So there's no manual error anymore, or being able to respond out of business hours. It responds immediately, all day, every day. And that's really allowed us to take that from lead to booking time from 14 days now down to 2 days. We've only just implemented this in June, but also really drive down our cost of acquisition as well. And that's a proof of like agenetic AI that we've been able to implement that we're seeing huge ROI from implementing. And I feel like we're just really at the start of this evolution, but by really having a team that really within Downing that takes on these new projects, it really allows us to continue to be ahead of the curve. And I mean, I'll give you another example of what we've just rolled out over the last 2 weeks, which we've never been able to do. So we've got 7,000 students that have just moved in 2 weeks ago. And as a family business, we really want to showcase our sort of family ethics, and we've got a name on the front door to make sure that the students are having the best experience when they're living with us. And through Verbaflow, we set up outbound campaigns where we call all the students and say, "How was your move-in process? Was everything okay?" And we then say, "Are you staying in the city next year?" And if they say yes, the workflow is set up to then say, "Okay, are you interested in rebooking your room next year?" And if they say yes, then it allows us to really start driving that predictive analytics for the first time. So as we're setting our prices for next year, we can have a lot more with a lot more accuracy of the intent of all our residents, and if they're staying in the city next year. And I think that's just 2 small examples of where we're integrating it, but there's a lot more that we're doing. But it's factual evidence that we're seeing by implementing AI and automation into our processes.
And is that an AI phone call that someone receives?
Yeah. So I mean, it's hilarious as well. If you actually listen to you can go back on the CRM and listen to the conversations, and the students don't know that they're speaking to when they answer the call, they say, "Hi, I'm D, a Downing Students AI assistant." But sometimes you can see that they forgot, because they start saying, "Oh, thank you very much for your time today." And like it's really funny listening back to some of them, just to really, as we're doing quality testing, to see if they're working out as we plan.
That's incredible. So effectively, you're able to get an in that use case, get an indication of appetite to stay next year, and then based on that, almost kind of create some sort of like wait list or kind of supply demand forecast, which will have an impact in terms of what your pricing structure might look like.
So really using that predictive analytics, cross-referencing that data with our data team to say, okay, of what we intended our rebookers to be. So that's typically driven by the year of study. So if they're like a first year, that we know that there's a good chance they're going to be staying in the following year, but it gives us a lot more accuracy with the data as well. And that's just a small example where I say we've got now a truly vertically integrated structure where we can leverage these data insights in automated reporting processes that our investment team can then leverage to start driving real-time decision making. And typically in other structures where we've seen, we're seeing it from the bottom down, where we put out reports and those reports will be acted on quarterly, and by the time you act on it, it's probably too late. And I think that's where, I mean, I've seen this year as we've been out on our global capital raise, investors are really looking at specialists in the sector. And when we talk about specialists, all of these types of things I'm talking about today are what we do day in, day out, and look at how we can continue to set the benchmarks in the industry, especially within the purpose-built student accommodation sector and co-living.
Yeah, I think airlines and hotels have been pretty good at dynamic pricing. It sounds like you're kind of almost taking some of that, some of the learnings, or maybe not quite there yet, but you're kind of building the data set and the insights to be able to then price accordingly to demand, right? Which, based on supply demand, investors are clearly going to want to have an understanding in terms of what that might look like, because it's going to drive returns.
Yeah, I mean, I really have a deep desire to make to really, for the next phase of Downing's growth, we do the fundamentals amazing. We provide great customer experiences to all our residents, and I think that's reflected in the independent survey results that we have in our NPS scores. But really, where I think the big opportunity for us in the sector is to really make Downing a tech-first real estate business and allow data to drive every decision making across the business. So there's no more like gut instinct as such, where in the past my dad probably would have had to rely a lot more on that. Now, because the asset class has materialized, we can use data to really leverage decisions across the whole company. And I think through doing that and investing deeply into tech, data, and our infrastructure, we'll be able to really provide some great results through that.
Property is a people business, hence the name People Property Place. Business has been tough the last couple of years. Get the people aspect wrong, business becomes impossible. Get the people aspect right, it's still hard, but it's manageable, much more enjoyable, and you're much more likely to hit your goals. So if you're looking to add top talent to your team in 2025 and you're open-minded to an alternative approach and you're keen to make business a little less hard, drop me a DM. I'd love to have a conversation with you to see how Rockborn could potentially help you with your human capital requirements. Right, let's get back to the podcast. What's been the hardest thing kind of coming into the family business? I've spoken to a number of people over the years who, their name is above the door. They are the son, they are the daughter, and they join the business. And it's got some pros and it's got some cons. What are some of those pros? What are some of those cons? And what are some of those challenges?
I mean, I'll start with the pros. I mean, one of the fortunate position I'm in a fortunate position to be able to come and take over and run Downing. And I mean, last week we were celebrating 5 of our staff members who were celebrating their 20-year anniversary at Downing. So I've come into a business where we have got an experienced management team who've been in the sector for a lot longer than I have been, and there's definitely a lot of pros to that, and that experience and knowledge, and really leveraging that knowledge and the entrepreneurialism that's got us to where we are today. But I think through that comes a lot of processes that have been in place for a long period of time. And me coming in and really being curious and asking, okay, how can we improve that process? Naturally, people are adverse to change. And I found what's really been helpful for me to in the business is when I find a problem or an area where I think I can improve, I look at before I even suggest it, what is the solution to that problem, in my opinion, and I'm bouncing really what I've learned externally off different friends and different industries or in different larger businesses, asking them how they do it in their businesses and how they can sort of really think about implementing that for Downing and in our sort of next phase of growth. So there's definitely there's some examples there where people are naturally adverse to change, and I think changing coming in and changing things is not normal, or people don't really like it. So I think luckily though we've got a great team at Downing who've really been receptive to that, and we've really led the industry from really the design and the feel of our assets, and set a lot of the standards that we see today. And through that's come from a team that hasn't rested on the laurels really to get us where we are.
Yeah, embrace change, evolution, and drive it forward. And I guess, with some new energy and curiosity, you can kind of grab it by the scruff of the neck and bring it forward as well. You touched earlier on in our conversation kind of a global capital raise, and you've been on trains, planes, boats all over the world, talking to lots of different investors. One of the things you touched on was the fact that LPs, investors, like specialists, and they want to be able to work with specialists. Are there any other kind of insights you can share just from some of your travels and some of the conversations that you've had with global capital?
Yeah, I mean, so we set this up as when we co-founded Aboria, we really thought that we were in a unique position given what we've done in the sector to really come out and then provide that truly vertically integrated business, and who specialize in the living sector, and that's all we do. We don't try and do anything else. And I found through our global capital raise that we've had this year, and I've been out really globally with Jessica Hardman, who's my co-founder of Aboria Capital, and that sentiment has definitely fed back in all the investment conversations that we've been having, where investors aren't looking for sort of multi-managers who do a broad range of different areas. They're really a lot of the conversations that we've been having is part of their sort of tick box in the IC processes, if you like, is that are they a specialist in the sector, and is there alignment in the structure? And through that, Aboria and Downing vertical integration, we're ticking a lot of those boxes, and that's part of the feedback that I've been getting, especially from a lot of the conversations that I've been having.
Yeah, I guess you can, as you touched on with the Downing family business, you've got the kind of the development arm, the operational insight and expertise. The kind of the final piece of the puzzle is that kind of that top down kind of investment management expertise. And you kind of touched on co-founded Aboria with Jessica Hardman, who's the ex-CEO of DWS. So yeah, to kind of, I guess, work on taking the business to the next level.
Yeah, I mean, I guess a way we can put it is that Downing's got to where we are today, and we've really been really successful doing what we've done, and definitely led the sector to what we've done. And the entrepreneurial mindset has got us to where we are today, and what the Aboria Capital team have been and Jessica have been able to come and do is really put an institutional wrapper on our business, and through that, a lot of the investment processes that we've been through is that, like, if you look at it from a Downing perspective and Aboria, we provide alignment by our co-investment stakes. We've got a scale to be able to provide the investors up to an opportunity of up to 11,000 beds that are both income producing and in our development pipeline. And we've got a long track record of performing and with 98% occupancy year on year, and great returns that we've been able to achieve through existing investments in our operational stock today.
Being a developer, first and foremost, there are a lot of headwinds. You've got Building Safety Act, there's inflation around some of the raw materials and costs, getting the team members to actually kind of build it, margins getting squeezed. What's your take, and how are you and the kind of the team navigating some of the headwinds?
Yeah, it was really interesting actually. We did a broad brush exercise on from the 2000s to roughly around 2012, from when we acquired a piece of land to when we practically completed. And if you take those years, the rough estimates was around 12 to 16 months from when we acquired to practically complete.
Wow.
And if you look at over the last 7 to 8 years, there's quite a few cases where we've been 3 to 5 years in the planning process, through by having land that we've acquired on our balance sheet, and we've got a willing backer in Downing to build it out, and the expertise to do it. And I don't think there's not many firms that have that expertise in the UK that can really facilitate that. So if it's taking us that long, and the drag that has on the IRR is definitely impacted. But luckily now we do see some light at the end of the tunnel through the Building Safety Act. I mean, there's a case in Newcastle where we're on site, where we've been in the gateway process for over 42 weeks. I mean, it's just not good enough when they're advising that that gateway period is roughly around 12 weeks. So a gateway to a period. So there's definitely some headwinds from a development point of view, but through that comes opportunity. And we see that really if we continue to build out where development has really slowed down, that newer stock that comes to market in that period of time will really start to drive the demand set for those particular cities. And we really look at data across all those micro locations to drive that decision making, and the relationships that we have with local universities, and look at enrollment numbers and how they're performing. So there's a lot that goes into the soup to form that outcome.
In terms of kind of asset locations, is it mainly kind of Russell Group universities, or what kind of goes into the kind of the mix for you to decide where to invest, where to develop, and kind of where to build your student?
Yeah, so I mean, we built as I said before, a great reputation for developing our assets in the best locations, and I think that's both internationally and domestically, adjacent to Russell Group university cities. So we only concentrate in the Russell Group university cities, and through that we do that specifically for numerous different reasons. But really, there's a broader demand pool that we can really attract through developing out in those cities. And I think as a operator, we were one of the first operators to set up I think it's important to mention, an office internationally out in China. And that was really as we saw that demand set growing in the mid 2000s, to really take advantage of that and leverage that opportunity and handhold a lot of the international students through that process who might be coming to the UK for the first time. And that specifically is driven by the biggest demand set for those Russell Group university cities, and that's really another example of what we've done to help facilitate those international bookings, and being one of the first to really leverage that and use data to drive that decision making.
Have you seen kind of a drop off or a change in terms of the location at which students are coming to the UK to study from?
I think the biggest part of our market is China, and that's the biggest market internationally. But what's really interesting, actually, that's come about through really looking at data is we did an exercise of, since Trump's come into power, we looked at impressions and inquiries onto our website from the US and Canada, and there's been over a 250% increase from the US and Canada, and that was so from last November to today, and we're in October. So we feel that those tailwinds only will start coming through the next booking cycle, and that's really, I think, a structural tailwind coming for the UK from purpose-built student accommodation, especially.
ESG is and has been all the rave. What is Downing doing to kind of address the kind of the environmental, social, and kind of governance opportunities and challenges in the market?
Yeah, I mean, I sit on our ESG committee, and that's sort of between Aboria and Downing. And I think from an ESG perspective, one of the earlier things that I did in the business across our assets, and it really it gets underpinned again by data, but we partnered with a company called Utopia, where the Utopia sensors are set up in each of our assets and the communal spaces. That allows us to monitor heat, temperature, noise, electricity consumption, and CO2 emissions, and then movement, and then through that, that provides the low hanging fruit from an ESG point of view to really monitor the welfare of the students. So if there's been no light in the room for over 48 hours, our team on the ground get an alert to then go and check on that student to make sure he or she is okay. So that's a component where we're using data to check on the welfare of the students, which is obviously really important, as a lot of these students are in living by themselves for the first time, and sort of reassuring their parents that we've got them covered. So that's one example from a sort of a social point of view. But and then the E point of view as well is really looking at our sort of fair use policies. Obviously within PBSA, it's an all bills included model. So really, we found that educating the students on electricity consumption and how we should start monitoring that to really drive down electricity consumption is important to us. So there's a lot of work that we do as an ESG committee, training our staff to educate the students year on year to really drive down those sort of average kilowatt hours per day. And we can get into a lot of them details, but we look at it from that granular level of detail across the portfolio. So we typically find that if we drive down 10% of the highest drivers of kilowatt hours or electricity consumption across our asset, it could reduce our utility bills by over 30%. So if we bring the top 10% of consumers down to what the average consumer is in the building, we found that we can drop our utilities by around 30%. And with that being almost the utilities being 30% of that OPEX line, there's a real incentive to really drive that down.
You are joint CEO with your auntie. You touched on your dad and your two aunties setting up the business. One of your brothers is in the business. It is a family business. What's it like, kind of working so closely with your family?
Yeah, I mean, up in Liverpool, we work in the same office, Sally and I. Sally and I work really well together because Sally naturally concentrates in areas where I don't. And I think through that joint CEO structure, it's worked really well. And I think I've come into a role where previously, before me, Anne, who was also Sally's sister at the time, who's now retired, it was just a natural fit for me to really move into that role. And I mean, Sally's really seen everything that there is to see, both operationally and in the sector. So there's a lot of learnings that I'm taking from being with her day to day, and really looking at how we can. I mean, this started in January, but constantly look at how we can improve together as a team to drive the best outcomes for ourselves and the company and the residents that we have living with us.
And what's it like working with your dad?
I mean, great. I mean, I couldn't have a better role model to learn from. And I'm really fortunate from that perspective to have him to speak to every day as a voice to really bounce ideas off. And I think I'm in a unique position to be able to leverage that. And that's the sort of part of the reason why I ventured out of the football earlier on, to really get involved in all the details of the family business, to learn all these details now while he's around and still actively involved in the business.
And then I guess you got Jessica Hardman as well, who you're co-founder with in terms of kind of Aboria. She's an absolute powerhouse, has had a phenomenal career and has been so successful through multiple different cycles. She must be awesome to
Yeah, I mean,
with.
I feel like I couldn't have a better team around me in that sense, especially with Jessica coming on board now. I think from the outside looking in, without being in the investment world before this, it was I'm amazed of the the depth of the market that Jessica seemed to capture while she was at DWS, and the amount of people that know her. So it's been great working with Jessica and all the Aboria team. They've integrated amazingly into the Downing ecosystem, if you like, and really with the Downing team members, which was really important to me, and to see how that would materialize. And I think we were really, Jessica and I were really selective with the people that we brought onto Aboria to make sure that they did work and could work hand in hand with the Downing team. With us being a truly vertically integrated structure, it was really important. Although Aboria is based in London and Downing's in Liverpool, there still needs to be that synergy across the different departments.
So you must flick between both Liverpool and London.
Yeah, the train is my best friend at the moment. I'm never off that train. But yeah, typically I'm up and down every week from Liverpool to London. Monday to Wednesday, Thursday I'm in Liverpool, and then my wife lives in London, so I come down to London. Also, I get exposure to the Aboria team here as well.
Yeah, I guess you've got to be across both, and then internationally as well, just with investors and other bits and pieces. So a lot of businesses that I'm talking to in the living world and the operational world are looking at setting up operational platforms. But my understanding is that they've got to get to about 4,000, 5,000 beds to break even, and probably about 100 team members as well. You've got 7,000 beds that you're responsible for managing. Is kind of moving into the third-party management game on the agenda for Downing? Would that be a kind of strategic move that you would entertain?
Yeah, I mean, we've only ever developed and operated our own stock, and our sort of assets under management has always fluctuated based on taking us portfolios to the market. And in those two cases where we've got two portfolios that we currently operate on behalf of investment managers, they wanted us to continue operating the asset then portfolios out for them. But I definitely think that it's a big opportunity for us to be able to go out and do third-party management. We've been asked to bid on a few RFPs recently. I think because we've got the infrastructure and where we are going with tech and AI and the opportunities that we'll be able to create within that, I think it's definitely a good opportunity for us to expand into doing third-party management. Really being specific of where we obviously have concentration in those Russell Group university cities in the UK, and we've got that underlying data that we can leverage across our portfolios, that essentially investors will be able to benefit from. So it is an area of growth that we're looking into at the moment.
2026 is going to come around the corner incredibly quickly. What are you most excited about for 2026 and beyond?
I think for me, given that we've launched Aboria last year, and we've been out globally on a capital raise, it's really executing on that initial capital raise. I think we'll hopefully have some positive news to talk about. Maybe you get Jessica on the show and she can come on and talk about from her perspective.
I've been trying to get Jess on for such a long time.
It's funny actually. We've got. I spoke to Izzy this morning as well. Who's also been on.
Izzy Armstrong.
Izzy's been on the show.
She's an early adopter.
Yeah.
One of the OGs. She's been on the show, and I know she obviously worked with Jess at DWS, and she's joined Aboria from a capital raising product client solutions type role. So, yeah, I know Jess is head down working hard, so hopefully I'll get her on in due course.
Let's do it.
So as we draw to a close, the question I ask everyone on the podcast is, if I gave you £500 million worth of capital, who are the people, what property, in which place would you look to deploy that capital?
Well, I think in light of the conversation today, I would definitely be allocating that to specialists, and those people who are specialists in that sector, whether that's real estate, infrastructure, people who are just focusing and waking up in the morning and thinking about that particular business. So if I was allocating 500 mil or any capital, that's definitely would be on the top of my list. And then what was the second part of it?
People and place.
Yeah, I mean that fundamentally I would be doing that investment into the UK PBSA sector. It's a mature asset class. There's great comparables to be able to underwrite within the sector, and also I think there's some structural tailwinds that are coming through different policies of different governments that we'll be able to leverage.
You touched on earlier in the conversation kind of co-living. Are there other kind of, parts within the living ecosystem that you could foresee going into in due course, or allocating capital into, whether that's senior, whether that's single family or garden style living?
Yeah, I mean, we see co-living, shared living as a natural evolution of student accommodation. So the operational model of like everything's included, what we've built out in Square Gardens in Manchester, is that. So the only thing that really changes is the events that are created around the residents that are living in these apartments. So in Manchester, where we have a lot more professionals as well as students, we'll create networking events and career opportunities that are available to our current residents, and really get we have a feedback loop through these events where they give us feedback of what they would like to see, and that is a natural evolution for us to go into at Downing. So obviously doing Downing students, then going into co-living. We haven't quite conquered the cradle to grave yet, but going into BTR and some senior living. But I think we'll assess that in due course. But no plans in the immediate future to go into any of them.
Never say never.
Yeah.
Well, Bay, I'm really excited to see what you and the wider Aboria and Downing team go on to achieve. I guess one thing's for sure, it will be tech enabled, it will be AI driven, and it will be informing all the decisions that you make from an operational investment and development perspective. So I'm really excited to see what you and the team go on to achieve. Thank you so much for joining me today.
Thank you for having me on. Appreciate it.
Hey, quick one from me. If you enjoyed this conversation, do me a favor and share it with a friend or colleague that you think would get value from this conversation. It would mean the world and help grow the People Property Place podcast. Thank you so much.